Fast Market here on the Schwab Network. It's time for cash tags. For that, let's bring in our guest. It's going to be Landon Swan, co-founder of Likefolio, and we welcome Kevin Hincks back also. Landon, when you look at this stock, it's like higher lows or lower highs on this one, down another 17% this year. It just seems like it's fallen out of favor. The pandemic, euphoria is over in this one. Do you guys have data that kind of supports this deterioration in the shares of Zoom Video?
Yeah, I mean, the web data has been really, really bad over the last several years. I mean, they've continued to decline. And it's just kind of an interesting story. Like, right place, right time. They nailed it. The pandemic was perfect for them. And I think investors really just got ahead of themselves, frankly. It's a good business model. I mean, the marginal revenues are incredible, right? I mean, you sign somebody up, you're making a huge percent on those. But you can see the web visits over time. I mean, it peaked back in 2021, somewhere in there, and it's just been continually declining since. Now, what's interesting though is when you zoom into this chart, I don't think that you guys have this one, but when you zoom in and you kind of see the change over time, in May of 22, there you go, perfect. May of 22, the change over time, the dotted line was about negative 45% year over year, right? That's really bad. You're getting cut in half on an annual basis as far as web traffic. But now you see that dotted line moving up, and for the math nerds out there, think of that as the derivative. Yes, the bold line is going down. That's web visits, but the change in web visits is going up. And even though it's still negative at negative 15%, it is much, much better than it was. And what that's telling us is the bleeding is slowing, right? And if that can ever get to zero and then start to turn positive, I think you have a turnaround opportunity with this stock. Like I said, the marginal revenues are great. They have a great cash position. They've done a good job of adding whale clients, those clients that spend over $100,000. They're up to almost 3,900. That's up 8.5% on a year-over-year basis. They've added AI to do a lot of cool things where you can transcript videos, you can have documents automatically created from the meeting notes if you have a meeting with people. So it's really cool what they're doing with the service. They were very, very overvalued for quite a while. And even going into their last earnings report, I mean, there was $64 going into that, or right after that earnings report, excuse me. And they talked about how, they had plus 3% on revenue, plus 3% on EPS. And now we're down from that point. So I think that clearly tells us that market expectations are that this company is continuing to underperform, and it's not going to do very well. But frankly, I think that the fact that the bleeding is sort of slowing down, and they have a really strong business model once they lean up, which I think they're done, and they're moving more towards that. I'd like this one longer term at the right price. And, we've got this little move up over the last week or so. I like it a lot better at 55 than I do at 60. But over the long term, at the right price, I think this one could figure its way out. For a long time, everyone was basically comparing Zoom to Pets.com from the late 90s, right? Like this bubble bursting, right place, right time, but really no substance to it. But that's not the case. There is substance to this company. And I think that with expectations being so low and the bleeding sort of stopping here, or at least slowing down, I'm not sure if it's this quarter that's the time to trade it, but I do see a turnaround in this company over the next year or so.
Landon, obviously the chart is what it is. Obviously the concerns about growth are well documented. The articles that I read on this, analysts are starting to firm up some of their looks at this name, and the promise of AI and what it can bring to this name is real, right? But depending on how they do it. Here's the question though. When you think about their competition, Microsoft Teams. Wow, that's a big, massive competitor who may have a leg up on them in terms of AI. Can they compete, a company with, one tool, one thing, one product? Can they compete with Microsoft Teams, or is this just going to be a niche player in a big pool full of competitors like Microsoft Teams? And so, yeah, this stock is beat up, Landon, but what do you think the future is if can they compete with Microsoft?
Yeah, I mean, it's David and Goliath, right? But they were sort of the first movers. I think they have that advantage to a degree. And then it's just what are your users, right? Are you going after the smaller users or are you going after the really big corporations? I think if you're going after the big businesses, you're going to struggle against Microsoft. However, like I said, they did increase those accounts, up 9% on a year-over-year basis, those sort of whale accounts. But I do think that there's a bit of a safety net down the road for Zoom if they do get dominated or they're struggling. Because the industry is so strong, the margins of this product are so strong that there's a possibility of acquisition down the road. If the price gets low enough on Zoom, it could be easier for a company like Microsoft or Google or Salesforce to just say, all right, we'll take Zoom, we'll roll it in, we'll make some changes, we'll slowly morph it into our product, but we'll get that customer base. So I think that is kind of the worst case scenario for Zoom. Now, what that buyout price might be down the road, it's probably not $60, right? But I don't think that when you buy a share at $60 now, you're risking 60. I think you're, maybe risking half of that, even if you're a 10-year holder. But of course, when we zoom into the short term, which is what I think people want to know about, I think that this stock is showing the signs of a potential turnaround. I think that it's more likely than not that investors are going to be somewhat pleased with what they report after the bell today. And for us, again, I liked it a lot more at 55 than 60, but we've got an earnings score of plus 31 on this one. And if it was trading at 55, it'd be higher than that. So we know that expectations have risen a little bit over the last week, but still, this stock is, about 5, 6, 7% lower than it was after it reported a pretty strong quarter last time. I think expectations are down, and I think that the bar is so low and the bleeding is beginning to stop that they can beat today. And so, I'm willing to place a bet to the upside as a long-term investor. I might wait a little bit, wait a little bit until I see that number that I was talking about, that derivative number cross zero, go from negative to positive. Then this is a really strong company. But today, I think it's worth a small bet to the upside.
Yeah, and we've seen moves to the upside after some earnings events are better than expected. Margins are really good. AI is starting to come into play here, Landon. But you look at those happiness levels, and I'm with you. I think I think the longer-term investor has to be focused on one thing, and that's a deterioration of the chart, but then also that potential of getting bought out by somebody. If they've got such high margins, and we're starting to get to levels as far as valuation goes that might make sense, but I don't know if I see that anytime soon, Landon.
Yeah, I agree. I think it might take a while, and yeah, the happiness absolutely is a concern. You don't like to see your company at the bottom of a list like that. It's like normally when it's David versus Goliath, you have the higher happiness, and it's just a matter of time before customers discover you, right? That's not really the story with Zoom. I mean, they were first movers. People discovered this technology through them, and now the big competitor who has a larger suite of offerings has a higher happiness level. So that is a bit of a concern. But you mentioned PE. We're down to 22. It's not bargain levels by any means, but if somehow this stock continues on the way down and it gets down to 30, and they're kind of holding their ground sales-wise, and you got a PE of 11 or so, then absolutely, I think a lot of companies are going to take a look at them. So, obviously time's going to tell, but right now, I think short term, I think it's worth a small bet to the upside. And then long term, I'm just waiting to make sure that they cross that zero level. If they can level off website visits and start growing revenue and become a little bit more relevant against these bigger guys with the suite of tools that they're, and rolling out all the AI stuff, then I think they continue to be a player. So this is not, I think the death of Zoom is overrated, and it's still a ways away, and they've got enough runway to make it still happen.
A clash of opinions on this one, maybe, perhaps, Landon, but great data as usual. Appreciate it.